Hello dear traders, my name is Olivia Kendall, I'm personal manager at NSBroker, and today we're going to discuss the gold and oil trading. As you've already noticed that the topic of our webinar is commodities trading, and I picked up the most sought after assets to trade. So gold and oil. In order to start trading that asset, I advise you to understand the nature of these commodities. And I'd like to start with gold. Later we'll switch to MetaTrader 5. But firstly, I'd like to discuss the main factors that drive gold price. So here we have gold. I opened some different charts with gold actually in order to compare what happened in the past, like we opened daily chart and like current situation of gold. So I'm going to inform you briefly what factors, what aspects drive gold price. So as I mentioned, to understand the nature of gold, we need to think logical, yeah? What actually influences the price movements, yeah? As I mentioned, gold is sought after not just for investment purpose, but to make jewelry, but it's also used in the manufacture of certain electronic and medical devices. So you understand that gold is not only safe haven for traders to put money when crisis comes or some uncertainty in economic, worldwide economic, but still it's a great metal to use it for electronic and medical devices. So right now in the era of digitalizations, and it's hard to imagine like contemporary devices without gold. And of course, the metal price has been increased substantially over the 40 and 50 years. It's a great fact that gold depends on supply and demand. So actually, as all commodity, gold is very important to follow using like inventories, yeah? Demand and supply. Another thing that I'd like to draw your attention to, it's correlation between US dollar and gold price. You understand that US dollar as a powerful currency directly influences gold price, and we may see it even on our chart. If you pick up any of US dollar pair and compare it with the gold, it directly impacts each other. When US dollar is powerful and strong, gold suffers from its push, yeah? Even here, we trade gold against US dollar. So, if we see that economy is getting to recover, what was like 2 past weeks, yeah? Gold was under pressure. If we just turn to H4, you see here this kind of drop. But at the end of the day, these 2 or 3 weeks, gold started to recover. In order to understand the nature of gold, I'd like to switch to daily chart. And everybody heard about drastical upward trend of gold when the first lockdown was declared and announced. So basically, people started to get money from USD pairs, from different indices, and they invested to gold. So it's another evidence of gold being safe haven. So people invest to gold when they feel uncertainty, some crisis, okay? So, and this kind of price, 2072, for the last time it was in 2009. So just imagine that obviously it was overestimated, and that's why we have such kind of downward trend. Right now, reaching the strongest level, supportive level, yeah, we see that gold price started to recover, and in the moderate way, it climbs till the current price 1784. So, as you see, the volatility by gold is extremely high, yeah, especially on daily chart. We may obvious see it, yeah, this kind of candlestick here, more than 1,300. Just imagine what kind of potential profit you could take. Another thing that I'd like to draw your attention to, it's like what kind of relation is between gold and interest rate. So a lot of traders ask me, okay, so it's clear that gold depends on US dollar, but what are we going to do with interest rate? Have you ever thought what is the relation between gold and interest rate? Okay, so actually rising yield indicates an expectation of strong economy. Accordingly, when the value of the US dollar increases compared to other world currencies, the price of gold usually drops. So it's easy to understand. And another thing is relation between gold and inflation. We have already discussed it when I mentioned about US dollar, but still, yeah, when inflation rises, the value of currency goes down. It goes without saying. And of course, people tend to hold money in the form of gold. So once again, gold was a great safe haven. Though a lot of investors, a lot of traders switch to Bitcoin and cryptocurrency, I still believe in its potential growth. Because as you see on daily chart here, it's just regular price for gold, yeah? 1 year ago it was between 1,680 and 1,780. So right now it's, I would say, yeah, relevant price for gold. Moreover, the industry is going to be recovered, economy is going to be recovered, and I see the potential growth till 1800. So if you're going to trade gold actively, I advise you to start with opening small positions, yeah, and short-term positions. When you understand the sentiment of investors, what they're going to do, what they're tending to prior to sell or buy gold, that's how you're going to follow the trend. And I'd like to advise you to use some specific indicators to trade gold. Actually, it's MACD, RCI, and moving averages. So yeah, RSI is a great indicator in order to follow the gold price. So the combination of all these indicators, or just only one indicator, or even Bollinger Band, what is represented on my chart right now. So it's up to you. The most important for us traders, yeah, just to determine the trend, find the best entry point, find the best closure point, and of course to take potential profit on that volatility, on that fluctuations. So to sum it up, please pay attention not only to technical and fundamental analysis, but just have a system of evaluating the real gold price. So as I mentioned, it's about supply and demand, the correlation between US dollar and gold and inflation, and gold and interest rate. So yeah, I think that it's going to be enough with gold. Just practice and you'll see the results. Another topic for discussion is oil trading. As I mentioned, oil as gold is very attractive to trade. Moreover, NSBroker provides a service to trade with two different oil. So actually most investors of course follow either West Texas Intermediate or Brent crude oil prices, and we have here XTI and XBR. Okay, so as it was in case with the gold, I'll try to explain you what factors drive the oil price. And it goes without saying that aspect of supply and demand is just the most significant role for creation the oil price. And of course, like in general, all oil prices are influenced by three major factors, as I mentioned: supply, demand, and geopolitics. So supply has historically been determined by countries that are part of OPEC. You definitely know that OPEC is the organization of petroleum exporting countries, and sometimes their decision is crucial to driving the oil price up or down. As you already noticed, oil was the core of discussion and was in highlight during the first, second lockdown, and it was actually the burning issue for a lot of experts, a lot of traders. So, as I mentioned, let's just check the charts here. So, like current situation of oil, you see that the volatility is really high. It was pushed up last week, and right now it was pulled back to the same level of 64. I'm talking about XBR. If you're an experienced trader, you have definitely noticed that pattern of price actions is similar by XBR and XTI. Here we are. Let me just here. If I switch between these two assets, the same. So it depends on you what assets you like to trade, but if you understand the sentiment of investors, and moreover if you feel that oil is a great asset for you to take potential profit, just take an advantage in it and trade with XTI and XBR. Why not? It's a great chance to take double potential profit. So let's back to the factors. And as I mentioned, OPEC is very important to oil price creation, and of course economic growth is like burning issue for oil, because when we see that economy is going to be recovered, and in general like industrial production is going well, so basically all these facts can drive up the demand for crude oil. And oil is not only fuel, but it's production of different plastic things, our clothes, and so on and so forth. So we can't imagine our lives without oil. Still, of course, people are going to reduce the oil producing. We know about Paris Agreement. It's another fact that drives actually oil price down, because people are going to minimize the pollution, and of course oil is a burning issue for OPEC. It's not only fuel as a damage for our ozone layer, but still, if we produce more oil than we need, of course our planet is going to suffer from it. So right now, in spite of economical growth of some countries that belong to OPEC, we need to care about our planet. And Paris Agreement, just I advise you to read about it more, find out more. Joe Biden actually signed the Paris Agreement because Donald Trump refused the idea of climate change and like reducing the oil production. So to cut this long story short, please, when you trade oil, pay attention to OPEC decisions. Moreover, I want to show you that in on websiteinvestor.com. There is in tools economic calendar, and you see that even today we have some data release of Cushing crude oil inventories, gasoline production, hidden oil stockpiles, and so on and so forth. So all of these data, of course, drive the oil price, and fundamental analysis still is worthy to pay attention to and to take into account during trading. Let's just sum it up, and I'd like to emphasize that oil depends on a lot of factors, but once you understand what drives oil and gold as a commodities, you have more chances to find the best entry point and not only follow the trend, but have own imagination and a comprehension of what is going to be in the future, what is going to be tomorrow. So it doesn't matter whether you trade during the day or you're as an investor and you want to keep the positions like for months. Still, just try to understand the current condition of both these commodities and try to do smart choices and make great decision in order to take potential profit. So with oil, I think another thing that I'd like to mention is that actually you have already noticed that oil dropped down significantly during the first lockdown here. It was extremely low price for oil, and some traders even expected that the same situation would be with the oil during the second lockdown, but it didn't happen, and vice versa, there was upward trend. So you see that oil as a fuel, oil as an asset is interesting to discuss, is interesting to trade. The volatility is still high, so just take an advantage on it and trade and practice. So I think that it was all for today. If you want to find out more about oil trading, gold trading, just discuss it with your personal manager. I hope that it helps you to start trading with these attractive assets. So for now, it was all. Thank you very much for your attention, and good luck with trading.